Welcome back, traders and investors. We have Annie Logue on the line. She's a freelance writer and a consulting analyst, also the author of Day Trading for Dummies. Annie, how you doing on this Wednesday morning?
I'm fine, thank you, and thank you for having me back.
No, we'd like to talk to you about your book and Day Trading for Dummies. Can you tell us a little bit about that?
Well, we just came out with the third edition, and a couple of months now already. And it is a guide to getting started in day trading, and it's very much from the perspective of day trading being a business, that you're committing your time, you're committing your money, and so you want to do it right. And you don't want to approach this as something you're going to do from your phone while you're sitting in traffic. I know all of the brokerage firms promote apps that let you do that. Realistically, that's not going to make you money. But if you can dedicate your time, your energy, and if you have the right mindset, it can be a productive way to make money. But I think, I view the book as almost like a starting point, like so that you can figure out if this is right for you. If day trading is right for you, it can be rewarding. If day trading is not right for you, don't even try because you'll lose money. It's not for everybody.
Yeah, let's talk
Nothing
about
is.
it. Let's talk a little bit from the perspective of the entire trading day.
Hmm.
Boy, there's a what do you advice do you give on trading the opens? I mean, there's a lot of opportunity. Also, there's a lot of risk. Do you have kind of like a general rule of thumb, or do you discuss that in your book about trading the opens and, for that matter, the closes?
Well, it is, with a lot of these things, and a precise trading style ends up being what's going to work for you. And for some traders, the excitement and the volatility of the opens and the closes do create some great opportunities. For those, you have to be willing to trade a little more instinctively because you have less information. And that's, in fact, why there's volatility at the open and the close, because the markets are trying to process the rumors, the expectations, the things that are happening but aren't quite fully understood. And in the middle of the day, everybody has more time to start thinking about what's really happening. And so you have less of that volatility, but you have less of the risk. And I think with so many things trading related, it really depends on the trader, and whether or not they're willing to be a little more seat of the pants, which I think you have to do at the open and the close, or whether they want a slightly more studied approach. Obviously, if you're day trading, you can't be too analytical, right? Because you have to be able to make decisions. You can't get caught up in the let me read one more headline, let me talk to one more person. And I think this gets back to what I think is the key part about being a successful day trader is putting some time before you really start trading and doing some testing with paper money, with dummy accounts, doing some back testing to get a sense of how you yourself will react in a given set of market conditions, because it's very individual. It's very much, it's not only the ability to recognize signals, it's the ability to act on them when you need to act on them, and to cut your losses when it's time to cut your losses, and take your profits when they're running. And that becomes very psychological. It's video games and psychology,
Correct.
really. I mean, that's what it takes, and some people are better at it than others. And some people are better at different times of day than others. And I think it's naive to pretend that that's not a factor. You really have to think about that human element, unless you're the kind of trader who can automate everything, but most people
Correct.
can't.
Correct. We're listening to
Right.
Annie Logue here, the author of Day Trading for Dummies on Benzinga's Pre-Market Prep, brought to you by Charles Schwab, talking about day trading tactics. How about the competition from the high-frequency traders? How does the little guy compete against all those big machines?
What's interesting is I think some of the benefits of the high frequency traders are starting to work themselves out, that they're not quite as significant as they were a few years ago. And that's what we see over and over again in the market, is that you know a lot of advantages are short-lived. So you do have to be very adaptive. However, the high frequency traders are a very real fact of life, and they've destroyed scalping. They've destroyed some strategies with larger companies. I think for many small traders, individual traders, the answer is going to be trading where there is some news and news flow that you can evaluate, and looking at the smaller part of the market where there just aren't the volume opportunities that the high-frequency traders can take advantage of. Now, what's interesting, though, is that the smaller part of the market, right now, we're starting to see some deterioration, which does create opportunities. So if you look at, say, the Russell 2000, it's starting to see a breakdown in performance. And the thing about the small companies, the thing you need to keep in mind is there's two reasons companies are small, right? One is that because they're new and they're getting started and they have a lot of potential. The other is because they're older and they're falling apart, the Radio Shacks of the world. When you're in that small part of the market, you're always kind of balancing. Are we looking at something that's new, where the bias is up? Are we looking at something that's old, where the bias is going to be down? But in between, there's going to be a whole lot of volatility. And I think as we start to look, there's a lot of concerns about the overall health of the financial markets. With a lot of large cap companies, it seems like their strategy for growth is tax savings. It's not the things you want to see in a healthy economy. It's not, opening new stores, developing new products, getting new patents. It's, let's change our corporate structure and move to Ireland so we can save money on taxes. That's not really the sign of a healthy economy, not the sign of a healthy stock market, regardless of what the numbers say. And I think in the smaller part of the market, what's interesting is that a lot of these companies where we're seeing the deterioration and we're seeing companies go from being, dollar price to penny stock value is in retail. And retail becomes especially interesting as we head towards the end of the year, right? Because December, everybody's got a holiday, right? No matter who you are, what your religion is, there's a holiday for you. So
That's right.
that drives the whole industry, right? That fourth quarter is key. But what we're seeing is a lot of companies that that we've had excess retail for a long time, that we're seeing stores that I don't know why they're in business. I don't know why Kmart is still in business. Have you been in a Kmart recently?
I have like specific items that I go to Kmart and buy, and that's like maybe like once every 3 months, and I go in there and I get my supplies. But no, I know, and they're all
Those stores are sad.
I know. Well, let's talk about the small caps a little bit. I'm looking at the chart
Yeah.
here of the Russell
Mm-hmm.
2000 ETF, and
Mm-hmm.
that is just not a pretty chart at all. Basically,
No.
a head and shoulders top that you had in July, and then you build another
Mhm.
head and shoulders top here in September. I mean,
Mhm.
that doesn't bode well for the market, does it, Annie?
No, it doesn't bode well. And I think it's a sign, if you think about what's happening in certain sectors of the economy, that it's companies that are on the deteriorating, companies getting in the Russell 2000 because they're deteriorating. And Now, again, for day traders, that kind of volatility, that kind of breakdown creates opportunities. I think this is a situation where they're going to need to be comfortable with being both long and short, which I would hope a day trader would be, right? This isn't just we're going to buy it and ride it up and then sell it at the end of the day. But I think it also creates the steady news flow because trying to figure out which companies are going to do well, which companies are going to go bankrupt, which companies are degenerating. And, I personally, I think especially this time of year, we're going to see a lot of the news flow out of the retail sector, and we're going to see a really nervous consumer. But that's what is going to make for the volatility that's going to create the opportunities. But I think overall, this is not a great time to be long or to be long the indexes. And I think we just need to sort through a lot. We've had a strong stock market, but it's unclear how much of that has been because of real growth, real companies developing real new products, and game playing. I mean, you look at the what's happening with Yahoo. I mean, that of course that's a large cap company, but how much longer will it be? They're not necessarily a standout in their business, and the strength in the stock price was because of Alibaba, right? Yep. And it's like, well, what happens? They're profitable, but how big should they be?
Exactly.
Right? And and how much longer can they stay profitable? Do they become the equivalent of a blog that generates a nice little business for, one person, but doesn't necessarily, drive the economy? I don't know. But
definitely trying to find their way. Annie, I want to talk to you about Radio Shack.
Radio Shack.
Yeah, Radio Shack.
Oh, it's a sad history. They could have been something. They could have been a contender. But yeah, I think with Radio Shack, that is a company that is probably not long for this world and probably does not have the kind of great assets that someone's going to acquire. So I think this is definitely going on its way to zero. And it is sad, because when you look at their now I'm thinking more analyst than trader, right? You look at their history, they could have done stuff, but it's breaking down, and they're not going to get, given the nature of their products, they're not going to get the fourth quarter miracle. A lot of retailers will try to hang on through this fourth quarter just to see what happens, and if there's going to be real bankruptcies, they're January, February, March, right, in the retail sector. But, Sears will make it through the end of the year. Who knows what will happen after that? Radio Shack, it's going to be interesting to see if they make it through the end of the month.
The end of the month, and this month being September. Wow.
Maybe we'll go October because we are towards the end of the month already. But,
okay.
Yeah. I mean, there's just
not a lot. Well, what I wanted to ask you about specifically was, the run up that you had here from the 50-cent level up to $1.70 and change, and that was all predicated on Standard General, a big hedge fund, coming in and saying that they're looking at alternatives for the company. And there was a little bit of a delayed reaction to it. And then it just got that 4-day run, a wicked run. I mean, to me, that smacks of impropriety, actions. But, it seems to be the way things go on in the markets now with Ackman and whatnot. Is that something that you'll hop in for like 3 or 4? Do you encourage your followers, your traders to get into that? Is that something that, you trade, and then, when this news obviously turned out to be bogus, it turns around. Do you get involved? Because I know you like to trade penny stocks. Is this one that you have on your radar and that you get involved in occasionally?
That for a while. I don't think right now. I think we're reaching the end of where there's that news flow that makes things interesting, right? I mean, because for a while when there's all that uncertainty about what's going to happen, about is somebody going to come in, what really are their assets? When there's that uncertainty, you get the opportunities to trade, and you get the opportunities to see things going up. When with Radio Shack, we've reached the end of that. I think we've reached the point where it's like, whoa, there's really not much here. They don't have great locations. They don't have great products. There's nothing they do that's special. So now I think we've reached the point where it's the end. I think with American Apparel, which I've mentioned before when I've been on the show before, there's still that uncertainty floating around. That's still one to pay attention to see if there's, some increase in activity or some increase in news flow, because we still haven't sorted out what the assets are, what the destiny of this company is. And it's in the type, they sell the type of products that people buy for holiday presents, or that teenagers take their Christmas money from grandma and they go spend it on things that grandma would never buy for them. But, so I think with American Apparel, there's still some more things happening. I do think that when you're looking at when you're looking at companies in distress, you do have a lot of trading opportunities until the destiny becomes clear.
So do you like to short these things? I mean, do you like to short Radio Shack for a day trade? I mean, obviously taking out taking a overnight exposure. So can you give us?
if you can short it right now, I'm not even sure you can right now because it's probably everybody's got it. But
any other
like
hot penny stocks that I know with this the volume goes in and out of these things, and whether or not they're news. Is there anything on your radar for today?
Not for today, unfortunately. I've got other stuff going on today, so I won't be trading. But I am paying it. Hopefully, I'll have some more names next time.
Okay, all right. We've had. We've had Annie Logue here on the line, freelance writer and consulting analyst, author of Day Trading for Dummies, being interviewed here on Benzinga's Pre-Market Prep, brought to you by Charles Schwab. Annie, thanks for coming on. Have a good day, and we'll speak to you soon.
All right. Thank you so much.
Okay.
Bye.
Bye-bye.